Right, I have actually found the URL for the COT data for the euro, and it is at the UK version of investing.com. So it's, as you can see here, ukinvesting.com. And if you just type in euro speculative positions investing.com, it automatically comes in. And as I said, what's interesting is that they've gone up to 180.6, and if I scroll that, if you take that down, you can see it's about, yes, it's the highest. Well, go right back to, where do we go? Goodness gracious, all the way back. That is that's the highest that it has been thus far. And just to round up on the Bundesbank, it's all been settled, all been sorted. I must admit, they didn't make a big hoo-ha about this. They will, the German court spat ends as if it was going to be any other way that this would end. You have to remember about the euro that it is a political project, and the euro is a highly politicized currency, more than any other currency out there. And ways will be found around to make sure that it will continue and it will survive. Maybe one day it won't, but at the moment, all the headlines that you read about, the euro is on its knees, that's it, this is the death knell for the euro. Please, you must always take it with a very large pinch of salt. But what that also means from a sort of chart perspective, technical perspective, is that it could be reaching a point of, it is at an extreme. It's never been so many positions to the long side for the euro. And as always happens, when any trade gets so it's asymmetrical, everyone piles in on one side, then the chances are there is going to be a snapback. Right, what I've got here is actually the Aussie, the pound Aussie. Not because I think that there's a potential trade here, it's because what I want to show, when we were looking at, when I said on the hourly chart that the lines were moving in the same direction, and this is on the hour, there hasn't been any kind of a divergence yet. And we go to the 10-minute, you can see quite clearly it's moving, they're moving in the same direction. Well, what do we actually mean by that? How does that show itself? How does that represent itself on the charts? And I've got the Ninja Trader ones here. So I've got the 2-minute, and David was saying about patience, and we can see here we've had, at the London Open, we've had an attempt to move lower, back, and basically we've got this is our fulcrum, this is if you like, our value area for this pair. This is the volume point of control, and this also demonstrates what I meant about liquidity in a pair on the volume point of control. This histogram that you see, the shading that you see on my chart here, this is the further out it goes on the volume point of control, it means it's a very deep area where there has been a lot of transactions. And pound Aussie is quite a heavily traded pair, I would say probably more so than euro Canadian. So there's a lot of activity going on in this region. But what that means for us, who are, we're looking for a trading opportunity, it means that it is there is a congestion, and we have seen attempts to move away. Then it goes back to the volume, back into the arms of the volume point of control. Is it going to carry on moving sideways? This is the 2-minute chart. Then I've got it here on the 5-minute chart, and we can see here even more the VPOC is at the same point of congestion. Now, you have to also look at the candles that have the attempts to break lower and break higher. This is 5-minute. I'm not saying that there isn't, for a trader who means trading the seconds charts, and there are traders who trade the second chart, who would not have perhaps used this price action in this chart to potentially take a trade. But we're not here to talk about very, very fast scalping. We are looking at the time frames that the majority of independent retail traders a trade. And but even if you were on a very, very fast chart, you would still have a slower chart to give you some context, because when a pair is in this kind of broadly sideways price action, you know that if you're on a faster chart, the potential for it to reverse and reverse quickly is that much higher. So it's understanding the type of price action in all the time frames, but particularly on that time frame that maybe you use to kind of what I call benchmark. So if you look, for example, if you use, say, that as I do, I look at the 10-minute chart, the 3, the 10, and the hour, and I look at the hourly chart, and I can see that a pair is in an extended phase of congestion and in a very narrow range. What that tells me is that on the faster time frames, yes, there are going to be little trading opportunities when the pair is going to move in one direction or the other, but the chances of that move being sustained and maintained are going to be very, very small. And also what that also leads on to is the risk of the trade itself. If you are taking a trade on a faster time frame of a pair that in your benchmark chart, say the hourly chart, is in a trend, is in a reasonably good trend, well, the risk of taking a trade while the pair is in that kind of type of price action is much lower. Whereas if you're attempting to take trades on faster time frames of a pair that in a slower time frame is in heavily congested and a very narrow congestion, then your risk on the trade increases. Now, what do we have here? We're back at the volume point of control. This is on the 5-minute. Let's look at, I've got the 10-minute chart, and I've got the same on the 10-minute chart. So what this is telling me is really, it's patience. Patience is what we have to, is what we have to adopt, as it were. And the lines on the CSI confirm this. I've just had an alert go through because I've now had a cross on the pound Aussie. But the CSI does have has an alert function on a cross, and you can set up multiple versions of the pair that you're trading, and it will, this little siren will go off and it will tell you there has been a cross. A cross is great because it also tells me that there is potential for divergence. So I think, I know it's been in congestion because the lines are moving in the same direction, but maybe I'm going to get a divergence and the opportunity for a trade. Now, what I also have is I have the Renko version of this pair, and I've actually got 2 Renkos here. I've got one that is set at 2.9, and I've got one that is set, let's have a look, at a 4.3, because one is based on the 30-second chart, which is this one, and the other one is set at the minute chart. But let's look at the slightly faster one, which is the 2.9 pip value. And this gives me another insight into why this pair is in a congestion. It is trading around, as I said, the S4. Now, with the Ninja version of the Camarilla, the Ninja version of the Renko, you can actually add the Camarilla to the Renko chart. You can't do it on the MT4, MT5 version. The platform just isn't sophisticated enough to be able to do it. But what it tells me is what I said about the 4th level of the Camarilla. It's always a level where, price will attempt to move, it will break away, and it will come back and retest. As we can see here, it's attempted to move away from it again. But look at what is actually impeding it. There's this resistance level up here. We've got this level here, which can act as both support and resistance depending on where the price is at the moment. It also coincides with the volume point of control. So it is, what is this telling us? It's moving sideways, so we really have to be patient. And then, as I said, the hourly chart is my benchmark that I look at. Where am I? Well, I'm also in a congestion, because the zone between the R1 and the S1 is what we call a buffer zone. Again, it can act as an area where we can expect congestion, as we can see here when we move over to the left of the chart. You do get, you will get a break, then it comes back, then it went back into this zone. We did finally get a break on this candle here, but look, it had to, the momentum that was required triggered the volatility candle, and then what happened? Straight back into the spread of the candle, more congestion. As I said, this is the hourly chart, but within the spread of these candles, because this is the hourly chart, on the faster time frames, there may have been an opportunity to take a few pips, but as I said, given that it is moving sideways, it would have been much more difficult if we look over here where we had a move lower, congestion, and then we had this nice move higher, ending as the volume then fell away. But on the hourly chart, in this move higher for a pound Aussie, and certainly in this move lower, in this trend lower for the Aussie down at the faster time frames, there would have been plenty of opportunities, and with far less risk than we have at the moment. And we know it's there's a lot of whipsawing. We've got wicks at the tops of the candle, wicks to the bottom of the candle. So as I said, we really do have to be patient and wait for a divergence and a clean break in one direction or the other. It may simply carry on for the rest of the session. So yes, coming along here, yes, it's lovely to be able to show you reversals and potential entries, and this isn't a great trade, but sometimes you also need to see price action when in fact there isn't a trade that is worth taking simply because of the structure of the charts in the different time frames, and having our indicators actually confirms what we are seeing on the different time frames. Understand this market for yourself, and then when a signal does come through from whoever you decide to subscribe to, at least you can say, well, that's an interesting, why is he saying that's a buy or a sell? At least you've got some, basic knowledge to be able to decide whether it is, potentially valid or not. Anyway, I'll get off my soapbox for now and just direct you to the Quantum Trading Education site, which is where you will find all the details of the program and what we talk about in these sessions. With the program, you do actually get the full set of indicators. The indicators at the moment are available for MT4, MT5, NinjaTrader and TradingView, but at TradeStation we are almost there with TradeStation. There are some fantastic videos that David has done on the Quantum Trading YouTube channel that actually also explain in more detail of how you can use the indicators themselves. TradingView is fantastic. At the moment, not all the indicators are available for TradingView, but we are working on that because TradingView recently upgraded their Pine script, which means that we can now have the same indicators for all the platforms that we are doing. And the indicators details you can be found at quantumtrading.com. But the education is at quantumtradingeducation.com. But if you want information on anything we've said, on anything you've seen, you can either drop me a line, anna@annacooling.com, or david@quantumtrading.com. And I'll just see if you've got any more questions. No, that's it. Brilliant. Thank you so much for coming along. A bit of an unusual session. David only with restricted charts. We won't be running this on Thursday again, will we, David? No. Well, Thursday will just be our regular session for the futures and the indices. So enjoy the rest of the trading day, and hopefully we will see you on Thursday. Take care.